Right. Happy Monday to you. Welcome to another episode of the John McEntyre Live Show. I'm here with Andrea McEntyre, my wife and financial expert. And Andrea, before we get into it, I want to say I hope that all the mothers across the land had a great Mother's Day. So, did you have a good one?
Yes, I had a great Mother's Day, and I also want to thank the other mothers, and those are special to me, and they're special to the women who happen to be honored to step in those shoes. So that could be the aunts, that could be, um, grandmothers, neighbors, family,
Mhm.
friends. Those women who have the privilege and honor to pour into other adults and children during those times when they need some nurturing guidance
Right.
along
That's
the
right.
way. So I
Mhm.
have those and appreciate them. So I want to say thank you.
Oh yes. Now I definitely appreciate the meals. Especially the dessert and all of that good stuff. Uh, I know I talked to it, and this is I'm going to jump on my soapbox and jump back off my soapbox. A lot of guys, especially, they say everything is like so centered around the women. The holidays and everything is how we can you know celebrate the women, and then the Father's Day is like you know like an afterthought or whatever, which I don't agree with. I mean, especially in my home, I'm like, well, everyone's celebrated in my family, but I was telling one of the guys, I said, look, I don't care who's being celebrated. I mean, it's not that I don't care. That's not the most important thing to me. As long as I'm invited to the party, that's what matters to me. Because if we're celebrating whatever, if the food is good, company is good, I'm good. I don't have to be the center of the celebration. I just want to be at the party. So that's the way I see it. That's my 2 cents about actually being celebrated. And I'm like, I don't mind celebrating the mother figures of the world, the ones who've taken time to pour in, into to society. It's more than a child. You're pouring into society, really, to actually create and raise and nurture a solid citizen.
Hmm.
Because that's what my mom always said. You're going to be a good citizen in society. That's what she said. Don't embarrass me. So that's what it's all
Absolutely.
about. So I'm good
Absolutely.
with it. So I'm going to get back off my soapbox. I just want to say that I enjoy celebrating the moms. I'll celebrate moms, aunts, whoever, as long as I'm invited to the party and the food is good. Now, if the food is not good, I may talk about you. As long as the food is good, I'm good. So we can
We
work with that.
appreciate your honesty and also support. For me, I would say the part that I appreciate, whether it's any celebration, I agree. I want to be there to help celebrate and enjoy. The food being great is a bonus as well. I will also say that um, I think for anybody, just someone being thoughtful enough to appreciate them. And for me, one less decision. So if it's planned and I can just relax and just enjoy myself, that is better than anything anyone can buy for me. Uh,
Exactly. Yep. I can definitely agree with that. All right. So I'm back. I'm off my soapbox. And today we're going to, before we get started, we're going to share a wallet win. And you said you had a very good wallet win to share, right?
yes, yes. So the wallet win may actually hit near home for a lot of people. So there are high schoolers um, and college kids who are transitioning either to summer school or back home or what have you. And so this particular wallet win was from, it happens to be a mother. She has a high schooler
Mm-hmm.
and she also has a college student as well.
Okay.
And her high schooler is getting their first job.
Mm-hmm.
So there was a big celebration as far as that. And she wanted to make sure that she was helping her high schooler start with money basics and a solid foundation, as we've been talking about. So they had to set up their direct deposit. So She went with them and helped them set up their first bank account. So they have the checking as well as savings. And she wanted to make sure that when everything was being set up, that it wasn't just an account to hold their paycheck and then money just constantly go in and go out. She wanted to help them set up the foundation of some automatic savings so they could pay themselves first. So they set up the checking, they set up the savings account, they learned how to use uh, the online system through their phone as well as their laptop, and they were able to see that not only does my money deposit, but every time I use my card or if their phone, if they're using, their phone to make payment on something, at least they know that there's a portion that's going to be set up in savings as well. So that's a huge win, not just them getting a job, um, but also them setting up the basics so they can start managing their money. So
Yes,
great job.
that is a good wallet win. Um, I know anything that you can do, like as far as guiding the kids, the earlier the better. And so anytime you're doing something that setting up a checking account, teaching them financial literacy, whatever their savings, especially the savings, getting them to save early in life. We will be discussing that topic eventually here in the near future about the power of compound interest
Yes.
and how they can really accelerate, building wealth and having a good retirement later on in life just by starting it as a teenager. I mean, from the teenage years to 30, um, there's just so much work money can do in that period of time compared to waiting to 30 to start. I mean, it's like a big drastic, a drastic change, a drastic difference in a person's investment portfolio if they just start with a financial picture just all the way across the board. If they start early and starting in the teenage years, we're working with Bella on that one. And good thing about it, she's agreed to it. Anything where her money's going to grow, and at the same time, and her other question was, so I don't have to use my money right now. Like, no, I mean, I'm happy if you start off managing your money. If you start off managing your money correctly, I'm happy. You're our daughter. We're going to support you in all of this. Is it because we're going to win later? Our win will come later when you don't come back to us needing money or needing us to pay for something or trying to move back in the home, because it won't be a revolving door. It's going to have to be something serious before you can come back. What is that called? Boomerang child.
Yes.
Boomerang. We're not raising boomerangs. We're not raising boomerangs. So you're going to find a better career. It can't be a boomerang. And so,
Absolutely.
so with teaching them early, starting early, I mean, I definitely commend them on doing that. So good job.
Absolutely.
Big
Absolutely.
wallet.
One of the things that was mentioned as they were sharing the wallet win is they regretted not starting earlier with their college student. So
Mm-hmm.
they're having to help them make some corrections within some, undisciplined spending and behavior.
Yep.
So
Oh yeah.
that's one of the major driving forces is they wanted to make sure to set up their other child with, good basics, one-on-one financial literacy, and then they're helping the other to kind of correct and they're sharing some mistakes that they learned. So it'll help the sibling, you know, hopefully not repeat some of the same mistakes that maybe their older sibling and even their mother and father had experienced as well. So
Oh yeah, most definitely. One of the best things you could do is share your mistakes. Most people share only the good parts, the wins that they've accomplished in life, and they never share the losses. I've learned more from my mentor, parents, family members' losses than I've learned from their wins, because most of the time the wins were tailored to the particular person. But their losses tend to be more universal. If you do something wrong, this is what happened. So you usually can teach better from the losses. Just what I've learned, just what people have taught me, and I've there's been enough mentors to say the same things over and over again to where I know, okay, yeah, these losses, they're pretty much, you can pretty much predict the losses. It's the wins that's kind of hard, because they were like, yeah, my win, it really came at an unpredictable time when I least expected it. But that loss, you can kind of predict the loss. You kind of know, if I don't do this, this is what's going to happen.
Absolutely.
When it comes to winning, you can say, if I do this, and this is how it's going to do. It may or it may not. You will probably win because of the principles, but the win may look totally different than you expected. That's in my
Absolutely.
experience. That's in my
Absolutely.
experience. Yeah.
John, I'm glad you mentioned that for two reasons. One, some people, their pride, their ego,
Mm-hmm.
sometimes gets
Exactly.
in the way.
Mm-hmm.
And the best, um, the best advice you can give to yourself and to anyone else is to just admit, I failed, I made a mistake.
True.
And then what can I learn from it? So the quicker we accept it for what it is, and then look at what we can learn from it, that is putting us back on the road to recovery, the road to proper mentorship from a genuine place, not from this, philosophy where you're talking to people about theories. You're really being honest, not only with yourself, you'll get better, but those who are around you will appreciate it as well.
That's
Um,
right. Yeah. Sharing your learning experiences. Now failure. One thing failure will give you it'll give you a quick education, uh,
yes.
and it'll give you some very good experience. Um, I know I learned a long time ago. It was funny because it was in like a month. Uh, the two lessons were like within a month's time.
Mm.
One of them talking with a group of guys, a group of mentors, and the other one I actually read it in a book, and it was like the same thing where the mentors, they had a group of us, the younger ones. We were all talking, asking us, what do you consider your largest failure? And some we were sharing, the failures, our wins, but they really wanted to know about the failures. And one of the guys was like, I've never really failed. Pretty much everything I do, I succeed at it. And they said, well, there's one or two things: you're deluded or you're lying, because no one can learn from you. If you win all the time, you're probably playing very small. That's what it is. You're only playing the game that you can control. And if you're going to get out here and expect to succeed in business and life and everything, you better learn how to handle losses, because they're on their way. And if you're not losing, you're just playing a very small game, and you're going down the road to regret, because if you've never taken a loss, when you get older, you're going to look back and see just how small you played. That was the lesson sitting in the room, and the air was extremely thick in the room. Um, I know I was like, well, I don't have anything to worry about, because I've had enough failures for everyone by that particular time. And then that one happened in person. Then I read in a book. It was saying the same thing. It was like, I was sitting in a group of, I think it was real estate developers, and they were all sharing their losses, their development losses. And one was like, well, I've never really lost doing, in a development. They was like, oh yeah. One of the guys spoke up and said, well, yeah, you do those small developments. They're really not big developments anyway. You'd have to be dumb to lose with those. And so I was like, wow, that was a good lesson to actually, experience it in person and then read about it a couple of weeks later. So yeah, that's good for the parents, definitely, and mentors or whoever. If you're talking to someone young, share the losses, because once you admit it, you've had more losses than successes anyway. Because that's most successful people. They was like, yeah, I failed 10, 15 times, but this was really one of my first successes. It's just a huge success is what it is. You ought to see the 15 failures before this. When I didn't think I was going to make it, or I thought I was going to live in a shelter the rest of my life, or whatever, lose my family. So
Hmm.
yeah, it's good. So yeah, parents, share your wins. Kids know we're not perfect anyway. They know it. So we might
They
as well.
resent us when we're not honest and we don't share our lessons and mistakes. And of course, you want to make sure that you're making adjustments to those to the age and stage of the child.
Yeah.
But by all means, as they're entering in those teenage years and they continue to get older, they want you to be honest. They want you to be transparent. And if for your ego's protection, if you have to give someone else the name or share the story as if it was your best friend or somebody else, that's okay to do that too. But
Hmm.
you can't come off that you're perfect because they know you're not. They see
Exactly.
right through us.
Right. Yeah. They know more than we give them credit sometimes. So I was like,
And they
I'm.
talk to our friends, and if we've got siblings, they talk to our siblings, so they've already ratted out.
Yeah.
They
Yeah.
they
That's what I was like. Hey, we may as well be, be honest and transparent up front, because once they go back to the hometown and spend time with the brothers and sisters and the parents and everything, they, we kind of have to work hard to stay high on the hierarchy after a couple of visits, because they tell all of the stuff. You was like, I don't remember that. Yes, you do. You remember. And they start talking. So you're like, all right, change the subject. Yeah, whatever, whatever.
Yes.
But
Well, speaking of changing the subject, I
yeah.
wanted to make sure that we covered, that we got to a couple of questions today. We've received several questions that have come in, and I wanted to make sure that we gave some time. We want to remind everyone to keep sharing those wallet wins
Right.
and keep sending in the questions, and also things that you want to learn or hear more about. That's greatly appreciated.
Yeah. So when I was gonna say I was gonna say something, but I was like, no, that's okay. Let's go into the question. What was the first question we had?
So the first question that we have is from someone who has group. They were saying that all of my insurance protection that I have is through a group plan with my employer. So they have group life insurance, medical, disability, and they're greatly appreciative of those benefits. But everything is connected to their group benefits through their job. And what their question was, John, is what type of life insurance should I have outside of my group plan? So my question to them was, number one, do you know how much group insurance that you have? And within that group insurance that's provided, how was the amount determined? And what we came up with in that question, because we were having an exchange within that question, they told me that they made roughly 60,000 a year, and that their insurance was 3 times the amount of their salary. So I was like, "Okay, so that's 150,000." And I said, "With the insurance that you have, what does it cover everything if you died yesterday?"
Mm.
And they said, "Gosh, no." Um, they were like, the family would be able to pay bills. It'd probably cover several months, but it would not eliminate debt, and it wouldn't cover some of our goals. And so we took the conversation to a phone call, and in that phone call, I really wanted to make sure I understood what was important to them to be handled if they died yesterday for their family. And when we went through the conversation, the most important thing was they wanted their family to be able to have that time to grieve and not be worried about any type of bills coming immediately due. So, the number one thing with group insurance, you might want to look at, depending on your budget, making sure that you start maybe with term insurance and look at covering um, replacing your income, whether that's for 1 to 2 years, and then what debts do you want to eliminate? If your spouse is not working, maybe you want to cover eliminating the large debts, such as your home or any type of credit cards, car payments, those type of things. And depending on if your spouse or partner is not working, then
Mhm.
what do you want to eliminate? Or and if they are working, then how many months do you want to also cover their income as well? So um, I thought that was a great question, because a lot of people have all of their eggs in one basket, meaning all of their insurance protection is covered through their group employer plans, which is not a bad thing. It's just that if something happened where they changed jobs, they started a business, they got laid off, they would be in a situation where they'd have to make a lot of decisions very quickly, and they may not make the best decision based on the emotional state and what could be going on
Mm.
financially.
Yes, that was very good point there. Um, what was it? I remember talking with someone, and that exact thing happened, um, where the one of the spouse had died, and this was actually, the opposite, because most of the time, um, why it happens that way, I don't know. Most of the time, it's the husband that passes first. Even if it's younger, it seems like, I was like, what is this? Some type of conspiracy to husbands or whatever, where they want the wives to live much longer. But I say that just, but then I back up. This one was totally opposite. It was actually the wife. She passed away first, and they were in their 40s. So,
Mm.
relatively young, two children in their 40s, and she passed. And it was very unexpectedly, and just so happened, um, he had bought a policy. He had a policy, is what it was. He already had a life policy in place before they were married, and it was a term, and it still had like maybe 10 more years on it. 10 years left on it. I think what did he say? He bought like a 20-year term policy. Bought it when it was cheap, and that was their saving grace, because he was like, hey, if it had not been, no, I take that back. I've got the story all twisted around. Let me get the story back. She had bought a policy when she was, they both had them, but she also had a policy. She brought a policy and she started working. She already had a life policy. That's the way the story's supposed to be.
Oh, okay. So let me make
Yeah,
sure I understand this, John. So what
yeah.
you're saying is this was a couple and they got, because this happens all the time.
Hmm.
People may get married and they either have their own individual life insurance in
Hmm.
place, or when they get married, they say, okay, we're going to be building a life together. Let's make sure that we have some, at least term insurance on both of us. So if one of us passes away, we've got something in place. So
Right.
she had her own policy
She had a
and he
policy.
had his own policy, and they did 20-year term. When
Yeah,
she
they had a
passed
third.
away,
Well,
he
no,
was
what
40.
what actually happened? I had it backwards. He didn't have a policy outside of work. She did. She had
Oh,
she
okay.
had her 30-year. So when she passed away, it she, she had like a 10-year like it was a 30-year policy, 30-year term policy. It was 10 years left on it, which was actually the husband, the widower. He said that was their saving grace, because her insurance that she had, her group insurance that was provided by the employer, although it was good, it 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 didn't cover as much as he would have hoped that it would have. You know, Basically saying they weren't as prepared as they thought they were. But that policy, her policy that she had bought earlier, was the saving grace. When that he was like, that was actually the money that really provided the net that we needed at the time for me and the kids, because it was so many other things that I had to take care of, because it was so unexpected. when you're in
Yes.
your 40s, you're really not thinking about, a death. You know that death will eventually come, but you're really not like sitting around thinking about it. You're in your 40s, you have your family, you're thinking about your family and vacations and planning. You have other things to do. So the actual her insurance policy, when it paid, he was able to take that money and he was like, this is now we have a true um, um, education fund, college,
Ah,
pay for college. He was like, because that was one of the things that was really on my mind. We were talking and we was like, we really need to get serious about the kids' college education and how we're going to fund it, because he was like, we didn't want to do loans, so, but if we had to, we would. So, but we had started the process, maybe looking at different types of scholarships and everything. So that money actually came in. He was like, and had that not happened, he was like, I don't know. He said it would have had to been a real serious plan put in place to make things turn out the way that I wanted them to turn out. So that was, it was a story to really remember. You know, just knowing
absolutely. I'm glad you shared that because a lot of people, um, some people think because they're a singled individual that they don't need life insurance, or um, I'm starting out young. I don't have a whole lot of money, so let me not have individual insurance. Let me just have the group insurance. And I'll be the first to say, yes, always take what your employer is able to provide. Or if you are a business owner,
Mhm.
always provide at least a base level in place. So no one is saying don't take the free benefits or the reduced cost benefits.
Yes,
Absolutely
because
take
yeah.
those, but you want to add on to it. So the group insurance, the reduce, compare your costs when it comes to your medical and your disability and life insurance. And if they give any portion of that free or for just a couple of dollars, take it.
Oh yes,
It,
take it.
it in
Most
most
definitely.
cases, it costs less.
Oh
And
yeah.
then if there's retirement benefits where they're matching a certain amount of money for every dollar or percent that you put away, take
Hmm.
it. Take
Oh yeah. Oh,
those
hey.
additional benefits that help you accelerate your plans. Absolutely. Um, I will say though, look at things that if something happened and you had to make choices, you'd still have things in place. So having a life insurance policy or disability policy, or if you're later in your life, um, if you don't have enough insurance or something in place for burial, having something outside of what your group or employer plan provides is extremely important because it gives you choices, and you're putting yourself in a position where you're thinking about those who will be left behind. And that's one of the biggest gifts that you can give to them, is that you did do some level of planning. So great question. Um, take the benefits and add something on the outside for sure.
Right. Exactly. All right. So we answered that one. We had one more, and that one was based. It was on the side of motivation, because here on the show we talk about money, but we talk about personal finance. When it, when you say personal finance, remember the first word is personal.
Yes.
So sometimes issues that come along may not be, it may show up as a financial issue, but it's probably a personal underlying, it's probably something personal. And that's what this particular question was all about, where the um, person asked the question, I'm just, how can I be motivated to take care of my money? I know that I should, manage my money. I know, and from what I gathered from the question was that they knew that they could be doing much better with their money. And they said, but I get to a certain point and it's almost like I just lose motivation. I like get here, I save, I go on a vacation, or I save and I do this, and then it's like I go back to square one all of. all over again. So what do I do to stay motivated to, to really win with my money?
I say the first place you start is why? Why is it important to you? Um, you know, what is the driving force? Because every day you're not going to feel like um, making a lot of financial decisions. And to be honest with you, you shouldn't be making a lot of financial decisions every day.
True.
Once you have a plan, or once you have you're setting forth a good foundation, and you are telling your money where to go, and sometimes you're only able to tell a little bit of money to go a few places, but you're giving direction. It's not always fun and exciting, but like anything, it takes discipline, it takes practice, and you're not always going to feel like it. So you do it anyway, because then it helps you for the days you don't feel like it. Just practicing that every single day, that puts you in a position to uh, really see the benefits of that hard work and discipline and just making good choices. You'll look back and you're like, wow, I've really I've really made a lot of progress, or I didn't realize I had saved that amount of money. Yeah, or um, now you've just kind of set it and forget it with some of your retirement accounts, and maybe you're only looking at those investment accounts uh, a couple of times a year, and then when you're looking at it, you're like, oh, we've been doing pretty good. I've left that money alone as do not touch, and interest, I've been able to benefit, as you mentioned earlier, compound interest. So you're not always going to feel like it. And once you're in the habit, you shouldn't be making a lot of financial decisions every single day. There should be a set time, maybe once a week or a few times a month, where you're looking at everything to make sure you're staying on track, and or you're seeing that, oh, I'm off track. Maybe I need to dial back. Something happened and I celebrated. Well, when I celebrated, I kind of eliminated my savings or something like that. So um, just work at it, practice every day.
Yeah. What I say is when we're working with someone, the first thing when we sit down after we get to know each other, sort of, uh, they tell me, the reason why they wanted to talk about whatever they wanted to talk about as far as financial. I want to know what their values are. I want to know what's important about money, what's important about life to you, because at the end of the day, that's really where motivation comes from. A person is motivated by their values. Uh, and values is just what's important to you on a deep level, not the surface stuff. Because when you're talking to someone, most of the time they're gonna skim the surface. Well, I want to send my kids to college, or it's always something that has happened that has triggered them to want to talk more about their finances with someone, with a professional. And so once they get past the surface thing, I had a friend to pass away, and they weren't doing as well as I thought they were financially, and they left their family in a bind. Or uh, I lost a job. You know, had won a small lottery. What do I do with it? And they was like, I always wanted more money than I needed. Now that I have it, what do I do with it? Now they're afraid. And so the first question that I like to ask, and it was asked of me, it wasn't the very first question, but someone once I met, and I have to mention him, Mr. Hayes Moore, late great Hayes Moore, which was our financial advisor, one of our financial advisors for years.
And
You know,
mentor.
and
Hmm.
mentor, exactly. Poured a lot, his patience, and he loved us and we loved him. He really cared for us, and he took the time like we were his kids to really talk with us about this. And I have to mention, some other individuals, Mr. Thomas Mack, Mr. David Taylor, uh, David Allen, late David Allen, who, had it not been for him, I, I wouldn't still be on television. We wouldn't be on television now. And he was officially our first coach, personal coach, and they all asked the same question. What's important about money and what's important about life to you? And so that has been a driving force for us, because once a person understands those deeper motivations, those deeper values of what's really, really important to them, the money sort of takes care of itself. They
Yes,
begin, because um, I say it like this. Yes, you do manage money, but what you really do, you manage yourself in handling money, because money is it's just what it is. It's not good, it's not evil, it's nothing. It's a tool, and it responds to your values. However a person, whatever financial situation they're in, that's just what they're valuing. If they have a lot of toys, a lot of cars or a big house and all of this type of stuff, they're just showing what they value, most of the time.
absolutely. I really like that, because the conversations about what's important to you, about money, what's important about life, um, everybody's response is not the same. Now, you and your family may have some of the same values, but what may drive you or how you define, um, you know, security and freedom, um, maybe your partner or another family member may describe it a completely different way. And just knowing what is important to that other person and what their words are, that just helps the two of you, um, whether it's a business partner or a life partner. It helps you understand what's important to them and why they may make certain decisions with their money or make certain decisions in life in general.
Mm-hmm.
It's because of those things that are their values and those underlying emotions, um, that that really help them make certain decisions, because there's some people who may make investment decisions that doesn't make sense to someone else. When you get down to the core of it, it could be because that's tied to someone that they love, that's tied to a specific memory. And sometimes they make decisions and they live with whatever the result is based on how, why that's important to them. Or you're helping them to see that, oh, we can honor them, we can care for them in other ways than maybe doing things exactly like mom or grandfather may have.
Yes, and we would definitely talk about that. That's a subject within itself. Scripts. We'll get into scripts, because a lot of people, they don't know that the reason why they're handling money a certain way is because that's just the way they grew up in, that style of money management and handling money that way. Um, because most people don't understand why they bought a certain house, to, for instance, till they thought about it. I mean, this house is similar to the one I grew up in, or my parents said, well, the sign of making it and all of this is a big huge house. You want to have the mansion on the hill, and now this person has the mansion on the hill and they're not happy. They're grateful, but they're not happy, because they don't really value what they found out. And I've helped people plenty of times understand that, especially on the real estate side. um, I started seeing that a lot with uh, working with a first time home buyer, and their parents would be with them, and their parents were like, if I was, me, I would get this and I would get that. And then, the child, the actual buyer, is saying, but that's not what I really want. That's what you want. I don't like this. I've seen that, and that's more of the empowered side. I've seen the other side say, hey, mom and dad, you like this? Oh yes. I can't wait to tell Bob about the house that you're buying and everything. They're gonna die when they hear that you're buying a bigger house than their kids have and all this. So now their kids are going down the road of what, living someone else's values, their parents' values. Now they have the home and they can't do other things. because they're mostly house poor now. They put all of their
Yes,
resources in the house, and they wanted to travel. They wanted to do other things, and they can't because they're having to keep this house up now. Now they've gone into resentment, and that causes other problems. So then they start using their money in different other ways, or misusing their money, living above their means, to try to have, try to live a certain lifestyle that they just can't afford, and it's really not their chosen lifestyle. And so
absolutely.
yes, so when coming back to it, when you sit down and do a values evaluation, that saves you from a lot of financial, personal, mental, spiritual heartache, because you know what's important to you, and now you're using your resources to live that life, to live what's important to you, and that's a happy and wealthy life.
Absolutely. I do want to also point out that for those who are already in their journey, it's not too late to
No.
take a look and assessment at your situation and review what's important, because as you grow and change within your life and career, and things that used to be important to you may have changed, and some of your under you may adopt additional values that you did not originally have because of your
Mhm.
life experiences.
Oh yeah.
So I want to encourage everyone. It's not just for those who are early within their life, their career. It's for any time. It's always a good time to take an assessment of where you are. Or if you're just, like we said at the beginning, not feeling motivated, it's
Yeah.
probably a good time for you to start taking a look at, well, why don't I feel motivated? Is it that
Right.
I'm just in a slump?
Uh-huh.
Or are there some things that's rubbing against my value and my core?
That's right. That's right. So it's good to check your values each year, because like you were saying, you can mature out of a certain value. Just maturity itself, or a life change, can cause a serious cause you to adopt a different value. um a spiritual experience can cause you to reevaluate values and adopt new values and put down old values. um we see that a lot. Athletes, entertainers, especially on the athlete side. When I've talked with athletes, once their career is over, and they're still doing certain things, and you're like, why are you still doing that? Oh, and then they think about it. It was like, I've just been doing it for so long.
Yeah.
I've just been in autopilot. But is it really working for you now? No, not really. Not at all. It's like it's countering what I really want to do. Okay, now it's time for a value reassessment. You know, uh,
Hmm.
so that's what I always say. Just sit down with a piece of paper, and don't do it with a computer. Sit down with a pen and paper, old school. Because, like I said, and I say it all the time, you've heard me say it before. When you use pen and paper, it causes something to happen physiologically with the brain, and it makes it causes it to work much faster for you. So when you sit down and you write at the top what's important about life to me, or what's important about money, and you start down the line of saying and asking the question, for instance, what's important about money for me? Well, it's to pay for my child's education. What's important about paying for your child's education to you? Well, that helps them not go out into life with debt. Okay, so what's important about going out into life without debt for you? Well, I don't want them to have to spend 10 years like me, using a lot of my early years, my productive years, paying off unnecessary debt. Okay, so what's important about not having to pay unnecessary? Well, I want to have the freedom. I want them to have the freedom to live life on their terms. Now we're getting to what's really really important. Okay, so what's important about living on your terms? I want to travel, for instance. And I said, we want Bella to learn about money, because if she boomerangs, she may boomerang back to an empty house because we may be gone. We may be on the other side of the world. So she knows what our values are. One of the big ones. And we talk with her and we tell her, look, these may change in 10 years. They may change in a couple of years. They may change, but you need to kind of know where you are right now, because that's what values help you understand who you are and what's important to you right now. It may change. Some guy may come into your life and totally cause you to do a value reassessment. I'll be there to help you with the value reassessment, because I want to make sure you don't marry a boomeranger or get attached to a boomeranger, because and if they do boomerang, they'll have to boomerang to their parents' house, because this one, it's just not going to happen. But that's what a value evaluation will do for you. If you really get serious about doing that value evaluation, it'll guide you. It'll become what is it, John Maxwell and some of the great coaches out there have said. It'll give you a true north. It'll give
Yes.
you a direction, and you'll start managing your money. You'll start saying no to things that you just used to say yes to, and now that's really not important. And a lot of times, when I've done value reevaluations, it's been things that I put them down and didn't even purposely put them down. They just sort of went away. I just didn't want to do it anymore, and didn't miss it. Don't miss it, because when I did the value reevaluation, it took me in a direction that I really wanted to go. And so I didn't miss that because I was going to something. And that's what values do. A lot of people, a lot, it's taught an old school style of motivation is like pushing yourself, you know, self-discipline, which is important, grinding it out, which is important, and just really gritting your teeth and forcing yourself to do things you don't want to do. And that is important, to be able to do things, because everything that you want to do in life is not going to be good. It's not going to feel good. So it's good to have that in place. But when you have your values pull you
Yes.
and drive you. It's like a natural motivation. You just get up ready to take on the day. For I know that's a cliche, but that is what happens. You wake up with a different type of with a good type of motivation. Um, you start early, you stay late. You sort of have to pull yourself away from what you're doing when you finally found those things that are important to you. And then you will say, well, I I don't overspend anymore, because saving for my child's education is much more important than buying that extra pair of shoes or that whatever. I can put that money over here in the child's education or my retirement, whatever is important, that you have to put in place. So that's what value evaluation will do for you.
Absolutely, John. I'm glad you gave that example because thinking about Mondays, some people dread Mondays.
Mm-hmm.
They look forward to the weekend and they dread Mondays. And as you've said, and we've said throughout, motivation, nobody's coming to wake you up and to cheer
You
you
are an
on to
adult
every
now.
step.
You are an adult now. Yep.
And there'll be times where you do need to do it anyway. And I love the point that you made about your having your value and having, your reason, your why.
Mm-hmm.
After you practice moving that muscle for a while, you're not having to consciously think about not spending the money on this or doing certain things. You now have things that you look forward to doing that's taking you in the direction of your goals and your dreams. And
Mm-hmm.
some things you don't have to consciously think about. You just stop doing it because it no longer aligns with where you're going. And
Right.
that, from a financial standpoint, from a health standpoint, I know I've worked with some individuals who focused on their health, and their financial situation benefited for the better because of some of their health decisions. They spent less money going out on entertainment and was able to save more money towards their goals because they were using that extra time to
Mhm.
focus on their health. And so with their
Mhm.
friends, their hangouts stopped being going out to eat and became more of, oh, let's go on a hike, let's go on a walk or something like that. So those were the things that they were able to do to really take them to the next level. So as they wind up the mountain to their next goal, to their next activity, they were able to see, um, there's things that I just naturally stopped doing.
Right. Okay. All right. Well, I hope we answered those questions. I hope we gave some good information here, talking about values and the other questions and the wallet win, which was a big one. And we welcome those. Keep the questions coming. Keep the wallet wins coming. Go to johnmcintyre.com if you want to contact us, or you can call us. And or you can call us 800-342-3199 if you have a question, if you want to sit down and talk with us about your finances. Please don't hesitate don't hesitate to contact us. I'm still reeling from all that food from yesterday, Mother's Day. So, Andrea, if you don't have anything, we'll wrap it up there. All right. So, on behalf of Andrea McIntyre, myself, John McIntyre, until tomorrow, we'll see you tomorrow, same time. Have a good one.